This is Session Capital Research. We like to give you our latest video on our YouTube channel. We posted recently a video on how to spot a buying opportunity, and we want to cover today how to spot a selling opportunity. We're going to use HubSpot, which is a CRM software company, as a worked example. Now, this is a business which has grown rapidly since its IPO some years back, and in staff personal accounts and also in our premium stock service called Growth Investor Pro. We called buy on this stock at 353 in 2021, and we sold at 801 also in 2021. So a good return in fairly short order. And we wanted to talk through how we did that. It's a repeatable method, and it's a method that anybody can learn to use. So we're going to run through a few points. We have a disclaimer to show you. We're going to talk about how to use fundamentals in this regard, how to use technicals, how we play this particular transaction, and then how to get our stocks research and our actionable calls, much of which is free. So disclaimer, it's on the screen for you now. Take a moment to read it. Fundamentals. Many people think that you can spot the time to sell a business from its fundamentals when revenue starts to slow or profit margins go down, and generally speaking that's not the case. Generally speaking, you should use fundamentals to give yourself a heads up as to when to start to think about selling, because very often, at least if you can read company fundamentals well and interpret them correctly, you'll see the signs before the market does. For lots of reasons, the market always overshoots on the way up and the way down, as you know. People don't pay as much attention to earnings reports as they should, and when they do, they often look at the wrong things. So this is what was happening with HubSpot as 2021 went on. As you can see, it had a big growth spurt through 2020 and early 21. By the third quarter, the September quarter, revenue growth had started to slow. So it had gone from 53% quarter on prior year quarter in the June period down to 49% in the September period. Now that's still very high growth, as you know, but it had started to fade somewhat. The trailing 12-month revenue growth had continued to climb because that's a slower burn indicator, but that first week quarter was an indicator of something. A stronger indicator, though, was the change in the deferred revenue growth. Now, deferred revenue is a measure of the contracts that a company has signed with its customers that have been prepaid but have yet to be delivered. So it's a leading indicator of revenue. If you have a slowdown in deferred revenue, and if deferred revenue is a reasonable proportion of trailing 12-month revenue, then there's a good chance that recognized revenue is also going to slow at some point in the future. So again, in the September quarter, this is last year, again, deferred revenue growth had started to slow. And we're using the September quarter because that was the most recently reported quarter prior to our sale. So you have a business still in very good shape, but it's just starting to exhibit some weakness. And if you'd sold right then in September, then you would have left a lot of money on the table, which is why we say use fundamentals as a heads up, but not as an actionable call. Technicals are a much better way to call the timing of purchases and sales. And if you do this right, you have to use it in conjunction with fundamentals. Use fundamentals to understand the underlying company as best you can, but use technicals to look at the price action in the stock. So this is what happened in our Growth Investor Pro service. We called buy at 353 in Q1 of 2021, and in Q4 we called sell at 801. And on the screen there you can see an extract from the chat service in that subscription service that we offer. So you can see the timestamp, November the 24th, 21. You can see where we bought, where we sold, and you note that we sold after it had ridden over the top. Let's walk you through how we did that. Okay, there's lots of different technical methods, and many of them work, and all you have to do is find one that suits you. We like to use the Elliott wave and Fibonacci method. So Elliott waves, for our purposes here, it's just a notion that says things tend to go up in sets of 5 and down in sets of 3. It's more complicated than that, but for these purposes, we can deal with that. And so typically in this system, the third wave of a 5-wave setup is the strongest one. It doesn't always move up the most. Sometimes wave 1 or wave 5 does, but it's never the least move in the stock price. It often moves up the fastest, i.e. in the shortest amount of time, and you can measure it by respect to the prior wave 1. So what we have here is HubSpot from the July 16 lows. It put in a wave 1 up, peaking at 209 just before the start of 2020. It dropped a little bit, put in a move up, but not quite to that wave 1 high, and then put in a wave 2 low right around the COVID crisis, and that was a so-called 0.618 retracement. In other words, it gave up about 62% of all the gains it had made in that wave 1 period. As the COVID crisis receded and Federal Reserve money came flooding into the market, the stock, along with many others in tech, put in a wave 3 up. So very fast, big move up. And you can measure these waves. These green ladders here, this is called a Fibonacci extension. So this measures the move in this wave 3 relative to the move in the wave 1 and the 2. There's nothing fundamental about this. This is just relative movement. So you measure this from this wave 2 low, and it's a function of this wave 1 move up here. Now, very often a wave 3 will terminate at the 1.618 extension of wave 1, and this is 388 here, and you can see that HubSpot thought about doing that. A really bullish move will be 2.618. So where the NASDAQ peaked last year, it was a 2.618 extension of its own prior wave 1. A really bullish extension is 3.618. So where ARK, the innovation fund, for instance, peaked was closer to that in 2021. And a hugely bullish one starts with a 4. Well, HubSpot hit the 4.236 extension of wave 1, almost to the dollar, as you can see. That peaked right around 860. And so we had noticed that at the time, and we thought, well, that's a big move up, and so it's not really likely to continue going up after that. We waited, we saw it fade a little bit, and we said then time to sell, because of course any stock can keep moving up, and we'd said that when we alerted our subscribers, but there's a very good chance that was a local top. Now, of course, we didn't expect quite the degree of reset that came along. Most people didn't, but that was a local top. Was apparent from the measures that we used here, these Fibonacci extension measures. And so we were able to buy at 353, sell at 801, all within the space of a year. So a pretty good return cashed. This is a repeatable method. We use it all the time in our stock service. So the question is HubSpot a buy again now? You can see from that chart that it started to rebound. Well, you can work it out. Watch our YouTube video that we posted recently called How to Spot a Buying Opportunity. It's available on our channel. We use the example of Datadog, but using the tools that you'll learn there, you can certainly apply it to HubSpot and other stocks. If you found this helpful or interesting and you'd like to get some more of our stocks research, there's many ways you can get it, and much of it is for free. First of all, subscribe to this, our YouTube channel. You can do that using the buttons on this page. Follow us on Twitter. We're at Cestrian Inc. That's at Cestrian Inc. And also head off to our website, cestriancapitalresearch.com, where you can sign up for our free newsletters. We cover tech, we cover sector ETFs and market index ETFs, we cover the metaverse. There's a whole range of ideas that we have there, many of which are for free. So head to our website, cestriancapitalresearch.com, and sign up. Thanks for watching our video. Subscribe for more, and we'll be talking to you again soon.